focus has been solving India's hard problems in the areas of financial and health inclusion. And we take a long-term view of these problems. So we take a 20 to 30-year view, and that gives us a chance to think through what are the fundamental infrastructure blocks that need to be put in place for these societal problems to be solved by different private sector market participants, many of whom have dialed in the call. And our belief is that these problems will only be solved by a jugalbandi of digital public infrastructure at the base and private innovators catering to the diverse market needs that India has on top of it. Typically, VCs and policymakers will then, on the back of this, take a 8 to 10 year view, and then entrepreneurs, which may either be incumbents in the existing space or challengers, upstarts, take a 3 to 5 year view as they build on top of these APIs. In other economies, a 30-year, a long-term view and institutions that anchor problems over the long term are typically managed by, say, universities. For example, that's what Carnegie Mellon did in the case of driverless cars. In the early 2000s, Chuck Thorpe co-founded the robotics lab out there, and about 20 years later, we have autonomous cars on the road, and so on. So any significant societal change, even if it's getting an individual to segregate their garbage at home, takes 20 to 30 years. And so our attempt is to bring about this change using digital public infrastructure within the areas of finance and healthcare in India. In the last few sessions, we introduced the notion of OCEN, the Open Credit Enablement Network, and ran you through different use cases and the technology APIs and flows that underlie OCEN between the LSP and the lender. In today's session, we'll dive into more of those details and also answer the various questions that have come in over the past 1 week. So with that, I'll hand it over to Nipun to take it over from here.
Good evening, everyone. My name is Nipun Kohli. I am a volunteer with iSPIRT Foundation. I've been here for almost 10 months now, and primarily working on cash flow lending, program. And before I became a volunteer at iSPIRT, I have been a small and medium business owner and also a fintech. I run a fintech company. So I have experienced some of these challenges in India, both from a public infrastructure perspective, as well as from a policy perspective, right? And I think today we will cover some bit of pieces that some of the new, opportunities which will exist because of the new cash flow lending rails in the, coming out of OCEN, and even talk about some of the consumer finance use cases, and and go in detail about them. Yeah, so I think the way we look at it is a new cash flow lending paradigm is actually there is a significant shift from the old way of doing business, right? And I think we have covered this in the last session as well. I think the most important part is from a lender perspective, the risk assessment, which primarily today happens based on balance sheets and annual report. And there is a complete shift of that to be happening through based on cash flows. And this is the only way we can see how businesses can get money for growth, right? Typically in India today, if you look at from a business perspective, businesses normally double in not less than 5 years, right? And because they double themselves by 5 years, because every single year they generate a balance sheet, and even if the good healthy business which generates 20% profit on a balance sheet doubles only in 3 years to 4 years, right? And the only way it can get the same growth we can achieve in the post-COVID economy is by looking at their cash flows. And that's the first fundamental shift which is happening from the risk perspective. The second biggest change which is happening from process perspective is that there is a manual intervention, and subjective based interventions or underwriting is converting it to a digital underwriting, right? Or digital processes, where even the lender, the change is happening all throughout the ecosystem, not only at the LSP layer, but also at the lender layer, where they're adopting to 100% digital process of underwriting. And actually the data is helping them to drive into 100% digital. The third biggest change which is happening is, traditionally, if you look at, in the SME sector, 80% of business loan in the country are used for working capital. And there was hardly very few loan products available today by banks for a different personas of customer. And we believe that because of OCEN and because of cash flow lending rails, there is going to be a variety of product which will be very different to each other from a use case to use case, which will expand right from the sachet ticket size to a large ticket size, depending on the need of the requirement and so on and so forth. And the fifth important process which is happening is the current model, in a typical term loan has been lend and forget, right? From a lender perspective, he lends you for 36 months and, and the customer keeps on paying EMIs month after month. And there is very, there is an interaction there between the lender and the customer, but most of the interaction is once in a quarter or once in 6 months. And cash flow lending ways will enable this interaction to be very continuous, maybe on a weekly basis or a daily basis. And that's a significant shift happening in the ecosystem, right? And the way this shift is enabled is what we talked about last time also through the loan service providers. These loan service providers are the entities which are facilitating all these functions and enabling, this all for the lender and the customer. In addition to the loan service provider, I'm going to talk about a new entity, which is the derived data providers. So are those entities which can provide derived data for the customer, right? Based on different kinds of, rules and different kinds of data elements. Some of the examples could be, let's take an example of a food tech company, right? Now the food tech company in one single avatar can play a role of a loan service provider. In a second avatar, the same food tech company can play a role of a derived set data provider. Here, what it does is it provides rating, maybe the transaction history, payment history, or anonymized rating of the borrower to the lender, right, on the consent of the borrower. And that becomes another opportunity for the food tech company. The similar example could be taken in an example of an HRMS product, right? An HRMS product which can, in one avatar, can act as an LSP or a loan service provider and can also act as a derived data provider where it provides attendance data, or it can be a payroll data or other kind of income tax proof and other elements of data, which can be a simple data provider, or it can be a ratings of those data, right, among the other personas of customers to the lender to make a logical sense of that. That's the next level of entity which will be possible based on this open credit rails on cash flow lendings. And further up, right? So I think when we talk about data providers, now these data providers actually can feed in to underwriting modelers. This is a new class of company which will come up, right? And this new class of underwriting modeling companies could be, the agent of the lender. And herein the derived, based on the consent of the customer, and through the derived data provider, this data is providing an underwriting modelers, right? And the underwriting modelers will actually help in making better decisioning, better cash flow lending decisioning for the lenders. Now here, as a borrower, I could actually give my own consent, via derived data provider, and this data can directly go to underwriting modeler, which helps in decisioning. Or it could be lender who in panel with the underwriting modelers and basically on the consent of the user gets this data and use that to basically make an underwriting decision. And the way it is happening is, let's take an example of a use case which we talked about last time, which is one of the first one which will probably go live on OCEN infrastructure is Sahay GEM or GEM Sahay, right? GEM, as we know, is the government e-marketplace. So GEM as an example actually covers 4 different kinds of rating for every seller on GEM marketplace. One of the rating is on time, right? Whether the seller has delivered all the goods on time, right? And that's the rating which it capture, throughout the life cycle of the seller. The second rating which GEM capture is whether it's what delivery was made in full or whether it was done in partial, right? The third rating which is GEM capture is reliability rating, right? So now these are the 3 ratings which actually gets feeded via a derived data provider, right? And which can help and get normalized, and it can create different scores for different class of borrowers, and then can be feeded into underwriting modeling system and can help in making decisions. So this is an example of how derived data provider and underwriting modelers would work in the new paradigm to enable borrowers to get better price and a better service loans, in the new credit rails. Further on, I think, just to recap, right, OCEN is, and the infrastructure which we talked about does not only service the MSME, but it also service the customers, right? So on the right side, if you can see, there are businesses, there could be an LSP app, which could be for businesses, which is an example of a GEM or an example of a Sahay GST app. But there are other, LSP apps also envisioned, right? Some of them could be a payment gateway app. Some of the LSP app could be run by HRMS companies or a food tech company for food delivery persons, right? And they could be app for consumers, right? And similarly, I'll talk about a few of the other examples where even brands can run their own LSP apps, right? To provide, their credit on top of their products, which they sell it to consumers, right? So I think that the point which we're trying to make is the Open Credit Enablement Network actually accelerate access to affordable and formal credit to MSMEs, to small businesses, and as well as to consumers, right? And actually it becomes and on the left side, if you see, there are different class of lenders available. Those lenders could be from the, from the digital fintech companies, all the way to a small and medium to a large NBFCs, all the way to private sector banks and a public sector banks. So on the left side, there is a whole quality of lenders available with different risk appetite. On the right side, we have different personas app, which are on different use cases, and they are impacting different class of customers on the rightmost side. Like, and I think that, like we mentioned, that OCEN is designed to enable many types of LSP offerings. And some of them, specifically on the consumer case, I will take up today, right? I think in the second OCEN session, we had talked about some of the MSME and the SME business use cases. Today, as it helps, OCEN enables equipment purchase or working capital, right, in the form of invoice or purchase order financing. OCEN also enables in home improvement loan for consumers, or some of the use cases which can be enabled on pay later or similar products, right? And I think some of the product I'll cover in the next few slides. So first of the example which I want to take up today on the consumer use cases on consumption finance, right? In the COVID, I think the streaming service has been a really hot cake, right? And I think everybody has been, using the streaming services, different streaming platforms available, right? And typically a customer today pays for a streaming service on a monthly basis, right? But all of these service providers which provide these streaming services, they love to offer us a quarterly or a bi-yearly or a yearly package, right? And there are great discounts which are offered on them as well. But from a customer perspective, because our cash flows are monthly in most respect, and we would like the payment to be monthly, right? Now, one of the example could be that the streaming service provider could run an LSP app and can enable upfront payment in advance for a quarter or a half yearly or a 12 months period. And actually here what happens is the whole interest could be typically subvented by the streaming service provider. So the 10% to discount can partially be part as a discount to the customer, and part of that can go into the interest cost. So it becomes typically like a no cost EMI, or maybe there is a credit back coming in, right? Because there is enough and more discount available. So that's an example of, of a consumer use case, right? Which OCEN could enable. The second example is where the school fees, right? And I think, as we all know, most of us kids' school fees is quarterly, and our cash flows are monthly tied up, right? And these quarterly fees, are very large and bulky. And if there is, for a parents, if there are 2 kids going to the school, this becomes a very big, liability for a month starting in the quarter. Now, very simple example here could be that some of the schools love, to provide, they would love to provide some kind of a discount if the parents are able to pay maybe a 6 months fees in advance or a 9 month fees in advance, knowing that their kid will go to the school, and this could be really get enabled through an OCEN network, right? That's another use case where, again, an example of a subvention which can come from the school could help in the interest cost and also enable in actually doing a partial discount back to the customer, right? So that's another example of a consumer finance where OCEN use case could get enabled. Yeah, so just to give you an elaborated view of how, how to look at this, right, in the services space, and specifically, if you look at, so now what's happening is the lending is done against the service cost, and discount is given by the brand. So what's happening in this use case is that there is a lending which is happening against an end use. An end use could be, school fees. Ending you can be a gym service. Ending could be a car services, right? Now, in a car services example, like for example, for all of us who owns a car, right? In a year, our car goes to a service station to get services done, 4 times a year, right? And every single time we may have like five to 10,000 rupees as the fee for getting the service done. Now, in this example, now car service provider or car services station could run an LSP app, or even the largest automobile company in the country, which owns about 5,000 car service stations, right, could actually run an LSP app where it could provide consumers to pay the car servicing fee on a monthly basis instead of paying, on a quarterly basis, right? And basically what's happening here is the borrower on record is the consumer. The subvention is coming from the car services company, which is making the loan as equal to no cost, right? And actually there is a great customer experience being driven, and the customer is able to pay monthly based on their cash flows. So these are some of the examples which can happen in the consumption finance area, where the service is being rendered, right, by the service provider or by the brand, and OCEN can enable some of these financial products to be built out. Another example I want to talk about today is, let's take an example of services professional, right? Services professional who work part of the food delivery companies, or who works part of the cab, providers, or a home services companies, right? Now, they are aggregators, right? The food tech companies or the cab aggregator companies, they have their data, such as how many kilometers they have run in a day, how many trips they have done, how many hours they have clocked, right? And so on and so forth. Now, all of these, marketplaces or aggregator could participate and become a loan service provider, and could provide this data signals to the lenders, right? Through the OCEN infrastructure, and where lender could actually give them a sachet loans, right? Loan could be for an end use, such as refilling his bike by petrol, right? Or loan could be for enabling him to, buy a tool set, right? As an example, and where the end use of the loan is very well defined, right? And the credit is very well defined. And on top of that, the collection is also trapped, because most of the times the marketplace becomes a collection agent, and they will collect money on, which is going to be a portion of the fee which they pay to the food delivery person, or a transport hailing person, or a home service provider, and then pay to the lender, right? And in addition to that, there could also be enabled some kind of data warning signals, right? Because if the guy is not turning up to work, that could be a great data warning signals that something is going to go bad and this loan will not get paid. So these are some of the real-time examples of how OCEN can enable, sachet loans on the consumer finance area. Now, I will actually pass on this to Ankit, right, to take up the emerging opportunities which is enabling up in the cash flow lending and the value chain.
Good evening, everyone. It's a pleasure to be here. And I'm a volunteer with iSPIRT, working on OCEN and contributing towards India Stack initiative at our end. I have been associated with iSPIRT as a full-time volunteer recently, but I have been a part-time volunteer in past as well. And in past, I have been involved in the fintech space in the country for about 7-8 years now, where earlier I was running a payments company called MyPool, and have been working in different fintech domains, B2C, B2B payments, and so on. And I'm very excited about OCEN and to share a bit more on in this session today. And I'll jump into this slide, which in all our preceding sessions, it has cropped up, which depicts the lay of the land for different entity types that partake in this cash flow-based lending. Now, all of them need to come together for affordable formal credit to flow without friction to the borrowers in our country. And today we covered derived data providers that Nipun just mentioned to reduce information asymmetry between the borrower and the lender for a perfect matchmaking with smart underwriting. and we covered how underwriting models get plugged with them. We have discussed the lenders and the new mindset that they have adopted for cash flow-based lending, where they're collaborating with LSPs and technology service providers for a new lend and monitor paradigm instead of a lend and forget approach. We have earlier covered LSPs, the loan service providers, and shared a few examples of business cases for merchants and consumers today. We'll now also discuss the other entities in this value chain. But if we were to take a step back and assess what value these different entities are bringing in for cash flow-based lending, we can abstract it to 4 atomic values. The value addition in this value chain, if you look at it, are around these 4. It is around distribution that LSP brings. It is around data, where derived data providers, account aggregators come in. It is around technology, where technology service providers, underwriting modelers step in. And it is around capital, where banks and NBFCs come in. And an entity brings one or more of the above to the table in a mutually exclusive manner to bring this cash flow-based lending to life. So this is a good framework to assess it when you take a strategic call in terms of participating in this cash flow-based lending value chain. Now, LSP, acting as the agent of the borrower, brings in distribution and business activity data of the prospective borrower. It educates the borrower about their choices, their bill of rights in a transparent manner. It helps them get the best interest rate from OCEN-enabled lenders for a variety of tailored credit products. It front-ends and orchestrates a great experience for the borrower, and that in turn benefits the LSP with higher customer retention, higher net promoter score, more liquidity and growth on the platform, and new revenue streams. But the key thing to note here is that in doing so, they're not acting alone, but collaborating with other players too. And the way we try to look at it is that by outlining the 5 Ds that LSP looks at for value addition, you can look at how this comes to life. So while they're bringing the distribution for helping lenders make sense of the alternate data on their platform and normalizing it, they can work with a derived data provider entity, which might be its own sister entity or a completely external entity. They can partner with TSPs for creating a seamless design delight for borrowers. They can partner with payment service providers for defined end disbursements and for repayment collection. So it's a collaboration that we see happening amongst LSPs and the other players to enable cash flow-based lending for different use cases. But one example of where this comes out very well is with a technology service provider. So apart from design delight for becoming OCEN-enabled by implementing OCEN APIs, an LSP can partner with TSPs for it. So broadly, in the context of OCEN, technology service providers enable LSPs and lenders to become OCEN-enabled. So what does becoming OCEN-enabled mean, though? It simply means implementing OCEN APIs to build the OCEN LSP interface on LSP's end and the OCEN lender interface on lender's end. In addition to that, TSP can also collaborate for building the front-end experience for the LSPs. And they will also create in the near future sandboxes for the market players to engage with the OCEN APIs, which is a digital public good. Now, it's also important to note that the TSPs can choose to work with lenders, with LSPs, or even both of them. And they can also play other roles in the cash flow-based lending value chain. For Account Aggregator, the quite popular part of the India stack that many of you are already aware of, it is a data fiduciary that empowers the borrower by facilitating consented data sharing for them. You have on the one hand varied sources of data referred to as FIPs, financial information providers, such as banks, mutual funds, insurance providers, and so on. On the other hand, you have FIUs, financial information users that request this data access for different use cases, such as flow-based credit, wealth management, and so on. The account aggregator's role is very critical for enabling financial inclusion and empowering these businesses and individuals by unleashing the power of their data as India becomes more and more data rich progressively. In the last session, we discussed in detail on how LSP interlocks with account aggregators for user consent initiation. So if you missed out on it, do check it out. Now, for the payment service providers, what they do is that they provide rails for the money to flow and devise new approaches and solutions here in the context of cash flow-based lending. So one, they enable controlled disbursements that give lenders more comfort. They provide payments instruments such as stored value account cards, e-vouchers, think of fuel cards, and more for defined or restricted end use. Just like we covered in our trucker trip financing use case in the second session for a fuel card given or to a trucker, or a fuel card that can be given to a fuel delivery service professional, as we discussed in the example today. The second thing that they enable is timely collection of credit repayments. So along with LSPs, they facilitate collection of repayments with escrow accounts and also provide convenient repayment mechanisms to lenders such as UPI e-mandate, e-NASH, and so on. So while many non-fintech entities see a clear utilization of OCEN and can see the tangible benefits it provides with reduced integration efforts, better financing opportunities for their customers, and so on, we have been deeply engaged with many existing fintechs and have gathered great feedback from many. We have witnessed a great deal of excitement from many and are seeing entities take different approaches and strategic calls on using OCEN. So we are very excited about this, and what they plan to bring to OCEN as these fintech lending players is very exciting because they have deep tacit know-how of the lending domain. They have been in the trenches with the lenders and the borrowers and can play multiple roles in the cash flow-based lending value chain. We see them unbundling different value propositions and playing different roles of LSP, TSP, and more. They are excited by the tangible benefits of OCEN, such as reducing operational hassles that come along with custom integrations, the problems associated with custom API integrations, ad hoc manual setups, increase exponentially when lenders increase, on their platform. While the lenders increase linearly, the problems increase exponentially. And OCEN standardization helps them turn a cost center over here into a profit center. But more importantly, it would help them to now focus on what they really want to do, which is to focus on building delightful experiences, great products, and more on top for the customers. This further enables them to expand their current portfolio of products and reach more varied borrower segments to tap newer growth avenues. And that is very exciting as well. But what this also means is that our entrepreneurs will have to be dual immersed in the problem solving as well as the messiness of these new tailwinds that are emerging for lending. So just the way taxi hailing aggregators did with GPS, which wasn't very well polished in the early days, or just the way payment players did with UPI, the early adopters over here will also accrue gains faster and spearhead the efforts of democratizing access to credit. And over here, they will play different roles and integrate different components of the lending value chain. And once they integrate it, a lot of the profit pools can flow to them as they streamline many of these credit use cases. Now, we're going to discuss a bit more in detail about becoming OCEN enabled as a lender and as an LSP today. So to become an LSP, anything you would want to know on OCEN, please check out and reach out on Credol, which is a collective of lending ecosystem players for cash flow-based lending. We have had many prospective LSPs who immersed themselves in OCEN APIs, came back to us with feedback and queries. In parallel, we have seen them carving out their different credit business use cases. And we will touch upon this in a minute in detail, but as we flesh it out, we will have sandboxes coming out soon from TSPs and other players that you can engage with and design product experiences for your customers. Once these OCEN APIs are implemented in the coming few weeks, Credol will facilitate light certification of the OCEN API integration with the Credol empaneled agency, which will be the penultimate step before go live. So please subscribe on Credol's site, and more information is coming soon on this on the website. Now, for LSP to create a credit business case, this is a broad structure in which we frame the way to build it out. It entails creating a holistic view of the credit product case you are building as an LSP. This exercise helps in two critical aspects. One is the subsequent interface with lenders for collaborating with them, and two, for informing the enhancements in standard OCEN APIs that will evolve more and more. But to begin with, one must create the profile of a prospective borrower. That what are the types of different personas of the customers they interact with. So to again take an example of a food delivery aggregator, one who would be in connect with a restaurant, a delivery executive, or a customer, one must create different personas of these different user types who can be prospective borrowers on their platform. Then how are they onboarded and what data is captured is also very important to list down. And then what are the types of cash flows and the frequency of cash flow? Noting that down also helps in creating a more cleaner picture of the customer whose problem we are trying to solve here. Now with regards to the credit problem to be solved, it helps a lot to lay out a qualitative description and then a quantitative description of the problem to be solved, to put it out that how acute is this problem and what are the current alternatives for them? How do they go about dealing with the liquidity crunch today, and so on? And how many prospective borrowers are there on the LSP today? Laying it out also helps a lender get a sense of the funnel that you'll be, the funnel of loan application that we're funneling into them. Now, for carving out the credit solution, one can look at different credit products matrix that you would want to build out, different loan offering types. So like a pre-shipment or a post-shipment product, which was the two offerings that we shared with that emerged on this high gem product. You can put out a term loan or credit line and so on. It's important to lay out that who are the parties involved in the transaction. Is a buyer involved in the transaction or not? Laying all of that out also helps in more clearly depicting the credit use case for us. Then once you look at creating a more defined construct of the product, giving details about the tenure, the borrower constitution type, what kind of customers are there for different kind of lenders who you'll be interacting with, whether they are existing to the lender or new to lender and so on. And then the business activity data that you would want to share subsequently. And what are these different data signals that you can clearly demarcate as the ones that you feel will be relevant for the lenders for credit underwriting are a few of the things that prospective LSPs are putting out. Beyond this, something that Nipun highlighted in the example today as well is that one of the biggest advantages of the continuous engagement with the LSPs that lenders derive is the post-facto data signals that are generated. So once the loan is dispersed, these data signals on the borrower's business activity can be part of an early warning system for the lender. And this continuous touch enables the lenders to carry it out now, which wasn't possible in a frictionless manner earlier. Moreover, the LSPs can also help in facilitating repayment and collections with the help of a payment service provider, as we discussed. And so these are the broad aspects to think of while you're building out a credit business case for your customers as an LSP. Now, just like the LSP, there's a very broad checklist of steps for becoming an OCEN-enabled lender. It starts with building out cash flow-based lending product ideas and policies at your end. This is again an exercise just like the LSPs are carrying out at their end. It's a business exercise that the lenders carry out. Once, as a lender, you implement these OCEN APIs with a TSP or on your own, which is a one-time effort for increasing gains, because as opposed to many of the custom integrations which have diminishing returns over a period of time, over here, a one-time implementation can help you in getting a seamless connect with increasing gains from a long tail of prospective LSPs like never before. And then once the APIs are implemented, before a go live is facilitated to Credol, a Credol empaneled certification agency. It will help in doing the light API certification of OCEN to ensure that the integration is neat and tight. And from a user experience standpoint, uniformity and security aspects are taken care of from the get-go. Now, OCEN sandboxes will be coming out soon, and we'll keep you updated on the latest on that. You please follow iSPIRT and the Credol websites and the Twitter handles to know more around that. With that, I'll hand it over to Siddharth now.
So we'll take a few questions, and for others, feel free to put in your questions on the link if you haven't already. The first question is around the business model of LSPs, right? So LSPs as an agent of the borrower, what would be the most incentive aligned way through which they would earn a fee? So Ankit, would you like to take that up?
Sure. So loan service providers or LSPs, act as the agent of the borrower. So their incentives are strongly aligned with their financial well-being and for providing, financing opportunities to them. Now, for provisioning this added value of financing facility to their customers, they charge a value-added service fee to them. So the commercial relationship here is with the borrower, and they can charge a value-added service fee or a convenience fee for helping them tap these new financing opportunities and avenues from multiple lenders in the country. And that's the beginning step. But what we are sensing is that there are more business models that will evolve from here in the near future too.
Got it. Thanks, Ankit. A question came in around, based on Ankit, what you presented, which is, does a derived data provider always have to be an LSP? And maybe I'll give this a go. So the answer is no. A derived data provider is separate from an LSP. So if we take Swiggy, for example, Swiggy is an LSP of restaurants. They may choose to be a derived data provider by sharing, a score of the particular restaurant with the lender. Or you may even or they may choose not to share that score and just be an LSP. You may also have dedicated technology companies that are not LSPs, but only provide a score. So there are companies, for example, that provide a socioeconomic score. They use different public data sets that are available. And at the resolution of a kilometer by kilometer, they are able to give you a score of economic activity in that region. Now, you may use that score to further inform, especially since this is a cash flow lending decision, you'd want to know, does a Kirana store earning 10,000 rupees in that area, is that high or is that low? And you may use that additional score to inform that underwriting. So short and sweet, an LSP and a derived data provider are separate. One may choose to play either one of these roles or both. The next question is, what is the opportunity for incumbent fintechs and fintech lenders in this space? And Nipun, maybe would you like to talk a bit about that in terms of where could they play in this new cash flow lending playground that's emerging?
Yeah, absolutely. Thanks. So, and fintechs, existing incumbent fintechs are very important part of the new credit rails, right? There are many opportunities. There are, some of the opportunities, one of the opportunity they would actually, which will be the immediate benefit they will get definitely is that the number of lenders and the different class of lenders now, because of the OCEN enablement, and suddenly these fintech providers would get different class of lenders being available now for their customers, right? Because most of these fintechs till date have been able to work with one class of lender, right? Somebody may be working with, like, for example, NBFCs, right? Or somebody may be working with, a specific kind of a bank now, but OCEN enables them is the different class of lenders could come in at different risk, and which eventually will increase for their customers, right? On their LSP model will increase their NPS. And of course, this will help them to generate more, more revenue and help them to increase net promoter score and more value proposition for their customers. That's the first immediate stuff which will come in. The second thing is because the fintechs have been in the space and they know exactly the intricacies of how these integrations are done, right? With the bank, integration are done with the other data providers, be it credit bureaus, be it other kind of data providing mechanisms. So there is a different class of, they could actually be, have a little bit of paradigm shift within their company, or maybe spun off another unit, and suddenly what will, and actually make the cost center, which was the tech team, right? Which was primarily the cost center so far, because the tech team used to produce tech for them, right? And this was a proprietary, to extent very proprietary tech, right? Now this particular tech team could convert into a profit center, right? And actually what they could enable is become a TSP, which Ankit covered, right? And that could enable a new class of opportunities for them, where they could actually enable some of these LSPs to get ready or get enabled on OCEN through their tech, right? And they could actually provide some kind of a platform, or they could provide services, become a TSP provider, and this is a new opportunity which could avenue. So I see this is a very great opportunity for the incumbents because they are probably part of the game. They already know the system very well. They know how the processes work. They would be the best one to get advantage of that in the current business, and also the new business opportunity which can come on their way.
Thanks a lot for that, Nipun. That was pretty comprehensive. And the last question that came in is around KYC, and we've got this quite a bit. So what are the KYC mechanisms that are supported within the OCEN framework, and how does it work? So OCEN supports pluggable forms of KYC. So all current methods of KYC, whether that may be OTP-based or video-based, using the new video KYC norms that have been published, are supported. And any new adjustments that are made and new enhancements that take place to the KYC mechanisms would also be backwards compatible, given that it supports pluggability of customer due diligence. That's about it in terms of questions. I'd strongly urge you guys to go through the technical specs in detail and send us any of those questions that you may have. And over the next few weeks, as you build either as a loan service provider interacting with customers, or as a lender, capital provider in that space, or a technology partner to either of these players and beyond, feel free to write to us if you have any questions. The next open house discussion, we'll let you know the date. So just register and you may follow us on social media, and we'll announce it shortly. And we are primarily, as Ankit mentioned, the sandboxes are getting ready. So once the sandboxes are live, we'll probably plan the next session around that. So yeah, here's a link to the API specifications. We'll soon publish also, right now it's in a JSON format. We'll also publish them in YAML so that you can easily view it as a Swagger file and generate code against that file as well. And if you want any more details about this in terms of context, do go through the UK SENA MSME committee report and the DAPA video that would give you an overview of the account aggregator system. So that's about it. Thanks a lot for dialing in.